All right, welcome to The Explainer. Today we're diving into a company that's right at the heart of the AI gold rush. But here's the twist. They're not selling code or fancy chips. Nope. They're selling something way more scarce, and they're making this enormous billion-dollar bet that it's the real key to the future of AI.
So to really get what's going on here, you have to ask yourself a pretty basic question. What is AI's single biggest weakness? I mean, what's the one thing that's really holding this whole tech revolution back?
Your first guess might be the software, right? The algorithms, maybe even the supply of those super powerful NVIDIA chips that everyone's fighting over. But actually, that's not it.
The real bottleneck, the Achilles heel of this entire AI ecosystem, it all comes down to something way, way simpler. The power plug. See, the thing is, AI is just unbelievably power hungry, and we are literally running out of places to plug it in.
Okay, so let's really dig into this, because the scale of this problem is just mind-boggling. You've got this sudden, explosive growth in AI hitting at the exact same time as this bigger push to electrify our whole economy. And it's created this massive collision between an almost infinite demand for computing and a very, very finite supply of energy.
I mean, just look at the raw numbers here. They're staggering. Projections are showing that by 2028, data centers in the US alone are going to demand something like 69 gigawatts of power. But the supply? It's only expected to be around 25 gigawatts. That's a 44 gigawatt gap. That's enough electricity to power tens of millions of homes. The grid, as it is, it just was not built for this kind of load.
And listen, the problem isn't just that we need more power plants, it's the plumbing, the infrastructure. In the most popular data center locations like Northern Virginia, the waiting list just to get a new facility connected to the grid is now 3 to 7 years long. So you can have the money, you can have the land, you can have all the chips in the world, but you literally cannot flip the switch.
So this crisis, naturally, has kicked off this desperate, worldwide search for power. And that's where a really unlikely company pops into the frame, Applied Digital, or APLD. Their whole story is about being in the right place at exactly the right time with what might just be the right strategy. So get this. Just a couple of years ago, Applied Digital was in the super volatile up and down business of hosting crypto miners. But they saw this power crisis on the horizon and made a huge pivot. They decided to get out of crypto and completely transform themselves into a laser-focused infrastructure provider for the biggest names in AI.
And their decision to go all in on North Dakota? Well, it turned out to be a bit of a masterstroke. The state has this thing called stranded power. Basically, tons of energy from wind and fossil fuels that's trapped there because the transmission lines are too congested to get it out, and the cold climate means they can be incredibly efficient. Their target PUB of 1.18 means for every watt they use for computing, they're only spending a tiny little fraction of a watt on cooling. Oh, and their cooling systems are waterless, which helps them avoid all the environmental drama that data centers in places like Arizona are dealing with.
So the big question is, how's this pivot actually working out for them? Well, it turns out this move isn't just a concept anymore. It's very real, and it's being backed by some of the biggest contracts you'll find in this entire industry.
And this is the number. This is the number that the entire story really hinges on. Applied Digital has managed to lock in a contracted backlog worth over $16 billion. That's not potential revenue, that's future revenue, already locked in with long-term leases.
And we're not talking about speculative deals here. That massive backlog is anchored by 2 gigantic contracts. About $11 billion of it comes from a 15-year lease with Coreweave, the AI cloud company that's famously backed by NVIDIA. And the other $5 billion? That's from a major top-tier US hyperscaler. We're talking one of the giants of cloud computing for a brand new AI campus.
So here's the really crucial takeaway. Applied Digital is fundamentally changing what it is. They're not a tech operator anymore. They're becoming a digital landlord. Think about it. They build the super specialized real estate, and then the AI giants come in, move in all their expensive equipment, and sign these really long-term leases. It's basically a real estate play for the AI generation. Okay, but if the future looks so amazing with billions of dollars locked in, why is the company's stock all over the place? Well, this gets us to a classic and really difficult investment challenge: the absolutely massive upfront cost of trying to build the future.
And here's the paradox. In their most recent quarterly report, despite that massive backlog, the company posted a net loss of almost $28 million. So you can see why this picture is so confusing for the market.
Yeah, this is the big question, right? This is what divides everyone. How is it even possible to have billions of dollars in guaranteed future revenue, but still be burning through cash right now?
Well, the answer is a concept called the J-curve. You have to spend a ridiculous amount of money upfront on steel, on concrete, on giant transformers to build these data centers. All those expenses hit your financial statements right away. But the rent checks, they only start rolling in once the buildings are totally finished and the power is on. It's that classic short-term pain for long-term gain scenario.
So, to build that bridge across the J-curve, they had to pull off a huge financial move. The problem was this massive funding gap for all the construction. The solution was a game-changing deal to raise $2.35 billion in debt. Now, this move fully funds the construction, and this is the really important part, it pushes their big debt payments all the way out to 2030. That gives them the breathing room they need to get the facilities online and start generating that cash flow.
So all of this, the incredible opportunity on one side, but the huge risk on the other, has created this dramatic tug-of-war in the market. It's really pitting two completely different views of the company's future against each other.
And you can see that conflict crystal clear in this number. About 31% of the company's stock is being held by short sellers. Those are investors betting that the price is going to go down. I mean, that is an incredibly high number, and it just screams deep skepticism from a big chunk of the market.
Now, the bull case, the argument for the company, is simple, but it's really powerful. It's that if Applied Digital just executes its plan, if they just build what they promised, they become the digital realty of the AI era. They're a top-tier digital landlord collecting billions in predictable rent for decades to come. In that world, the stock is worth way, way more than it is today.
But the bear case is just as easy to understand. It's the fear that this whole thing becomes a construction money pit. That construction gets delayed, maybe by the harsh North Dakota winters or supply chain problems, and costs just spiral out of control. In that scenario, that heavy debt load could crush the company before the revenue from that huge backlog ever has a chance to save them.
So, where does that leave us? Well, the equity report that we're drawing from here suggests the company's finally hit a really critical turning point. So let's look at the final verdict and what you need to be watching for next.
So what's the bottom line? The verdict is that the strategy is totally real, but the risk of actually pulling it off is high. Those massive contracts prove the demand is there. The new financing gives them the fuel they need. But now, it all comes down to execution. The milestones you see here are the big tests. Every time they power up a new facility, that's a win for the bulls. Every delay is a point for the bears. Applied Digital is making a huge bet that they can become the landlord for the entire AI revolution. The only question left is, can they build it in time?